Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. It's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, thank you.
All right, so we're talking beer, one of my favorite topics here. But Sam Adams, I think they kind of pivoted their business into the hard seltzers and some of the other products here. The stock is basically down about 73% from all-time highs that we saw just about a year and a half ago. So it's been under pressure. It doesn't seem to catch a break in this downturn. But is it execution by the company, according to your data, or is it just changing taste from the consumer?
Well, it's kind of both. I think that they bet on the wrong market. They really went pretty heavy on the seltzers, like you mentioned, the hard seltzers. And, quite frankly, we've seen a very steep drop-off in consumer interest in hard seltzers overall. When we look at the brand profile, the product profile of this company, we only see two of their brands really showing any strength. That's their Twisted Tea brand and the craft beer-esque Dogfish Head beer brand. Both of those are positive, but where they placed their bet was on Angry Orchard and especially Truly, and you can see that the deterioration in consumer demand for Truly has been exceptional, and that's a lot of the reason why Wall Street has rightfully abandoned this stock and this company. When we look at Sam versus peers, there's an entire kind of negative headwind happening to these massive alcohol players. Only Coors right now is the only one we're seeing positive, with Sam down, Budweiser down, Constellation Brands down. But what really bothers us about what we're seeing with Boston Beer Company or Sam is the fact that this is getting worse. A lot of these companies have had a year-over-year decline in consumer demand from the LikeFolio perspective, but for Sam, it just keeps getting worse. And I really think it comes back to the fact that they just bet on the wrong products in their portfolio. They're not a Constellation Brands, which is starting to turn around a little bit here. They've got a lot invested in Truly and Angry Orchard, and consumers are simply moving away from those types of products.
Andy, where you invest your resources as a company, that's been in the news a lot lately. There's a lot of art, right, to making the choices, seeing the data and making the choices to where to invest your money. We're seeing it from Sam Adams. We saw it from Target and Walmart on a much larger scale. But this is an important story for 2022 about CEOs and management teams that have gotten it right and gotten it wrong. And this leap towards hard seltzers, towards Truly, and away from, remember, their name is Sam Adams, their name is a beer company, and they seem to be getting hurt because they strayed out of their circle of competence, I like to call it.
Yeah, they did. And when you compare it to what Constellation Brands does, I think from an execution standpoint, and as a long-term investor, if you're thinking about looking at these companies, it's almost like, which executive team do I trust with my money to maximize shareholder value? You look at what Constellation Brands does, they have a very, very wide portfolio of products, and they seem to do a much better job of figuring out where the consumer is going and putting their bets into those pockets, rather than just, with Sam Adams, it feels a lot more like, well, here we have a seltzer product. We hope people continue to like seltzer products as much as they did in the past. We hope that continues to grow. We're going to kind of go all in on that segment, and that's when you can get massive backfires. And so I think if you're looking at these companies as defensive plays, you've got to look at the executive team and the decision-making process that they've had over the past 2 or 3 years. Which ones have made better, more prudent decisions for their shareholders? The answer is pretty clear. And Sam Adams' stock has been punished as a result, significantly.
Yeah, we got a relief rally on that last earnings event because revenue beat The first revenue beat in several quarters as the stock's been under pressure, as you noted. But Andy, when you look at that year-over-year change in purchase intent on a 90-day moving average on some of your data, you know, Molson Coors is doing pretty well. Sam's not doing badly, but then I was pretty surprised at Constellation Brands down 17%, even though Modelo leads in that in the beer category.
Yeah, it really was. You know, Constellation Brands had a really, really hot season last year. Almost all of their brands, from tequila, you know, to Modelo, were on fire. So that's more of a you know, tough comps situation.
Got it.
Than what we're seeing with Sam Adams, which is just kind of a deterioration of the overall company that seems to be accelerating.
Okay, got it. Now, earnings are passed. The stock's filled that gap, that rally gap, back to the downside here, even though it's having a good day today. If you were to have a score on this based on your data, pretty negative?
Yeah, just slightly negative. I mean, the stock's been beaten up enough, and we think for very good reason. So we're slightly bullish, or slightly bearish, I should say, long term. I think there's much better bets in this industry and in the market. And you know, if you're a holder of Sam Adams, today might be a little bit of a gift.
A gift, I like it. I'll take a gift of a 6-pack of beer, though, anytime. Yeah. All right, Andy, appreciate all the data. Have a good day.
Thanks, you too.
All right, that's Andy Swan.
Sorry, they're sending you seltzer, hard seltzer. Sorry.
I don't want that.
Oops.
I don't want that. That's Andy Swan, co-founder of LikeFolio, breaking down the data for us. Kev,